Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-minis futures for the session of 20th of August. In this video, I am going to show you the market recap on the last session and a potential trade review in the 3 minutes time frame, which I will cover the entry, exit, and the rationale behind. And I will elaborate a bit more on how I would have approached trading the price action responding to the Fed minutes yesterday. And going forward, I will cover the bias, the key levels, and also the trading plan for the session later. All right, so let's just get started. As we can see in this daily chart for the S&P 500, so yesterday was a bearish day with the increasing of the supply level, and due to the Fed minutes that comes out at about 2 a.m. my time, which will go into the hourly time frame to have a clearer look. But before we do that, one thing that stands out to me is this kind of the price action. So we have a immediate resistance level forming by this trading range, the small trading range here, and this bar initiated a breakout and then followed by this upthrust. So it means that it's just temporarily committed to the upside and then fail, and yesterday just comes back to the trading range. So this bar is very similar to this rejection bar. I think this is the 11th of the August. So definitely we're breaking out here, get rejected, and subsequently close near the low. But look at what happened next. We did not see any kind of the downside follow through. In fact, we have this bullish bar to absorb the supply on the way up. So I think it's very important to monitor the price action for today's to see whether we can have any kind of the supply absorption or find any support level and to turn around. Otherwise, I think we'll see some kind of the reaction to test the support at the lower level. Okay, I will dive in a bit more in the later part of the video for the current market condition. But first of all, let me just get back to the hourly time frame and let's have a look on the session yesterday. So as we can see in this hourly time frame chart here, and we notice that it's very obvious we have this sharp selling bar at 2 a.m. my time here, and that comes with a tremendous amount of the supply level if we compare to the 2 a.m. to 3 a.m. 3 a.m. period. So definitely I would say that the supply level is almost like double. So 2 a.m. bar has this kind of a sell-off, find some support at the swing high level at around 3380, but subsequently also fell, and that actually reflected in this 3 a.m. bar. The sell-off bar actually sell all the way down and tested this level, the previous day low level at 3364. But during the Asian session today, we did not see any kind of the strong rebound. In fact, the sell-off continued. We have another kind of the correction until we find some support level at the prior swing low level at around 3350. So before the US session, we have seen that the S&P 500 just kind of consolidate within the upsloping trading range here. Else, I think you can just use this horizontal trading range is fine as well. So it's consolidated in a very tight range and waiting for the Fed minutes to come out at around 2 a.m. Yesterday. And I think everything looks quite normal because we're still in a waiting game for the Fed's minutes to come out. So let me just zoom into the 3 minutes time frame to elaborate a bit more on how I would have approached trading the Fed minutes in terms of the price action. So let me get down to the 3 minutes chart, because if we look closely, so this 3 minutes chart actually reveal quite a lot of things. First of all, you have seen that I have drawn out this upsloping structure. So prior to that, we have this kind of the rally with the fading momentum, followed by the change of character, and subsequently it just went into this trading range, but it's kind of in an upsloping format. But it doesn't really matter. You can just draw it up as a horizontal trading range like this, which is fine, and also this as well. So this is perfectly fine. But if we just take a look at this upsloping trading range, one thing that stands out is this sharp movement, the sharp reaction down, which actually has an attempt to upthrust here and then fail, followed by this sign of weakness. So this is actually a sign of weakness, and we have seen that the supply has been increasing, and eventually right after it just break down, whether you look at it from the upsloping structure or the horizontal type of structure, this is the rally up, and the rally actually fell. So eventually it just enter into the sell-off mode, continuing to sell off here. So let me just zoom in here, and let's just analyze a bit more detail here. So first of all, if we just take the upsloping structure, then definitely think this is the sign of weakness. And this bar here actually comes with an increasing of the supply. So this actually gives us a red flag in the first place, but it's not that obvious to just enter right at the close of this bar unless you just purely based on the increasing of the supply level and with this kind of the bearish bar, which I don't know, maybe you could do that. But what I will approach to this kind of the trading, especially reacting with the Fed minutes, is to interpret the whole movement down as a sign of weakness. And that comes with increasing of the supply level, which is very significant because this kind of the supply level is even higher than the opening session here. So definitely, if you pay attention to the supply level, you'll notice that there's around 20K in the 3 minutes time frame, which is a lot. And subsequently, it actually break down the immediate supporting level at around 33.80 or 82. Subsequently, it just had a reaction, some kind of the price interaction, attempt to rally. We have seen this bullish bar here, and followed by a test. So this whole thing here is a reaction as a test of this sharp down move. Let's compare the supply level. So we have this high level of a supply level, but look at the test here. The test also comes with relatively high supply. I would say is pretty similar to this sort of the supply level when we have this kind of the sharp and swift sell-off. But look at the results. We did not really went down further. In fact, I think we just created this kind of the higher low. No downside progress, but that's with a lot of the supply level. So a lot of the effort to push the price down, but we did not see any kind of the bearish results. In fact, it just kind of a reaction compared to this kind of the sharp movement. So at this point, we can expect a rally up, which indeed there was a rally up here. So this is the rally up, and in terms of the magnitude, I think this is one of the kind of the best rally that we have ever seen out from this structure. So because there isn't much rally here, and definitely this is kind of the best rally that we have ever seen. But we can see that because the test of the prior reaction here comes with quite a lot of the supply as well. That's why this actually makes me feel quite uncomfortable and still relatively bearish. So unless we can see some kind of the breakout here. So we have a rally up here followed by a backing up action. But look at the backup action. It actually failed to break out here. So this is the shallow backup action. And we did not see this kind of the bullish bar to break out to the upside. In fact, it just failed and actually break back into this the trading range from here as well. So definitely, I think one of the trade that the short trade to the downside can be just right after the close of this bar. So this is a failure setup. And in terms of the whole structure, if we just take this as a sign of weakness, a rally followed by a test and successful and expect a rally, but look at where the rally actually went. And this is actually the structure that we just drawn up, the upsloping type of structure. It just kind of tested the structure and then rejected from this resistance level. So if we just use this as a structure, the small structure here, this bar actually uh, fell and just back inside this trading range here. So I think this could be one of the short entry after the close of this bar. Otherwise, the next bar is fine as well. And in terms of the volume, we see that the supply level has been picking up, and subsequently, maybe this kind of the structure to break out of this flat kind of the pattern, which is fine as well. So this is probably the second type of the entry, and to trade according to the breakout failure. So this is the flag. So we have a sign of weakness and followed by inability to rally up and eventually failure here. So this could be the first entry and this could be the second entry, and to write the downtrend here. So this is how I would have approached trading the price action just right after the Fed minutes. And in terms of the supply level, definitely this is huge. And we do not see any kind of the settlement of the supply, such as the decreasing of the supply level. In fact, we probably suspect there's some kind of the bullish kind of action here, but it didn't happen. Despite that, we have seen this kind of a bit of the, well, in fact, I don't think there is a decreasing of the supply. In fact, the demand has been decreasing, and eventually we see this breakdown bar here. So anyway, this is how I would have approached trading the Fed minutes. So in terms of this downswing structure, if we just take a look at just a horizontal type of a structure using this, so this is also another support turn resistance. Once it's break down here, and we just found some rejection and resistance here. So it just failed to overcome this resistance level, and eventually it just reverse and go back down. So this could be uh, this could be forming this horizontal type of a structure with a failure setup as well. So depending how we look at the structure, whether it's a horizontal type like this or either the upsloping type like this, either way will give us great entry. All right, so this is the trade review in a 3 minutes time frame. Let me get back to the hourly time frame, and let's talk more on the current situation right now. So during this morning, the Asian session, so we have seen that we did not have any kind of the good rebound. In fact, we just broke below this supporting level. We have this kind of the bearish bar. So the immediate supporting level is at around 3350. So you actually found support here. See, there is a hammer bar and then followed by the confirmation, the bullish bar, and we have a good rally. But that actually just reached until this support turn resistance level, and currently we just having a reaction testing the 3350 supporting level again. So I think this is quite an important level. Should this fail to hold, then definitely we'll see S&P 500 to move down to the next supporting level, which is around 3320 to 3330. This is the next supporting area here. So this could provide some kind of the decent support in terms of the structure level. And subsequently, the next supporting level will be here, 3270 or 3280, which is based on this prior swing high level. So this is a lot more stronger. But definitely, I think 3320 to 3330 will provide some kind of the support if 3350 fail to hold. All right. So in terms of the trading bias, definitely I think I still keep a neutral bias for today, because we can just trade it either side, trade either direction. But in terms of the long-term direction, nothing has changed yet, because it's still in a bullish environment. And for the immediate trading setup, what I'm looking at is still at 3350. So if we have seen some kind of the great reversal together with judging with the supply level, and this could become a good long entry. Actually, I just had a long entry just a few hours ago based on this level 3350, but just got stopped out because of this reaction bar right here. But anyway, subsequent level will be around 3320 to 3330 here. So we'll see whether the price will reach there. So another bearish scenario to play out would be a breakdown and followed by a wiggler rally up to test this 3350 resistance level. So this could become a good short entry as well. So just need to see how the price interact with the level. Alright, so this is the end of the video. Hope you enjoyed it and get something useful out from the video. If you like it, just click like and also hover to my name or picture to follow me. And do remember to subscribe to my channel so that you get instant notification of my future video ideas. So as usual, if you have any kind of the comments, suggestions, or trade ideas you'd like to share with me, feel free to comment it below. I will reply to you. Thanks for watching. I will talk to you soon. Bye bye.